Hey everybody, this is John. Welcome to the free video, and let's just kind of dive in here and take a look. So for the NASDAQ today, it was actually a pretty quiet day. We've had some spectacular gains in the NASDAQ, and so they took a rest today. And where a lot of the gains came from today was in the financial sector, and of course the Russell is highly correlated to the financial sector. So the unregulation or the loosening up of regulations in the financial sector, which is good for a lot of the smaller to mid-tier banks, which make up a lot of the Russell 2000. Boom, you saw a huge pop in this today. And of course, the financials also helped the S&P 500, and you saw a big pop in that today as well. I thought it was pretty, in our live trading room today, it was pretty funny because we were sitting there trading when North Korea fired off yet another missile. And so it was interesting to watch this reaction. It was kind of fascinating where, you saw the reaction here, and after that it's like, okay, another missile, and then we're off and running. Just keep in mind that the forces at work in this market kind of transcend anything else that's going on. Okay, it's like an expansion of asset classes. If we go back here, and of course if you guys are trading cryptocurrencies as well, GBTC, a lot of people were asking like, okay, is this something they should trade? I personally don't trade it that much. I'd rather actually just trade the actual cryptocurrencies themselves. Keep in mind that this is supposed to trade at 1/10 the price of Bitcoin. So this is essentially saying that Bitcoin's at 14,700, and if so, then this would be accurately priced. So what happens is this thing tends to run up first, and then it has to kind of consolidate and get kind of caught up to the actual price. So is it foretelling that Bitcoin's going to rally? It's not really about that. It's just I don't think anybody really understands what this instrument is. They're scrambling hand over fist to buy it, but the reality of it is it's correlated to be 1/10 the price of Bitcoin. One thing that's notable here is that gold on a monthly chart, for the first time in a long time, we're starting to set up a long squeeze. I'll switch this to the futures so it's a little bit cleaner. The last little long squeeze we got was right here, back in early 2016, and from there you can see, okay, short squeeze. But look at this, the long squeeze here of July 2009. This is when gold went from $900 up to $1,900. And what I'm looking at for this particular monthly squeeze is that it's a similar pattern where we've had enough time to build up a lot of energy, and gold's actually getting ready for a fairly major move. So one of the things that we're starting to do here, and I'm not a huge fan of leaps for a variety of reasons, but in this particular instance, when we could buy an ETF that's got low implied volatility, I don't mind going out 416 days, okay, getting the January 2019 120 calls that are slightly in the money. Okay, now, is there a lot of premium here? Yes. But by buying these longer term ones, we could sit through an entire monthly move, okay, and I'm just starting to leg into this position, but we could actually have this pay for itself by, say, coming in here and selling, going into December and saying, all right, well, I'll sell some of these December 125 calls against it and collect that income, okay? And you can see silver here has the same kind of setup. It'll be interesting is if the momentum on this monthly squeeze can turn higher, but silver never leads gold. It's gold always leads the charge, and we'll definitely be keeping an eye on that. All right, so GLD, that's an ETF. And speaking of ETFs, we've got a lot of questions coming up about, well, a couple different things, but I am going to crunch these all into a free webinar this upcoming Thursday, November 7th, November 30th at 7 p.m. Central. And of course, that's 8 o'clock East Coast time. So what I've got setting up here, it's called the Haystack ETF option trading method. Okay, so what does that mean? It's kind of finding the needle in the haystack, but a couple of other different things as well. So if you go to simplertrading.com/haystack, you can come here and sign up for the free webinar. But what I'll be doing here is, first of all, showing you a couple tools that I love. These are things that, one of them I've been using for a while, and am now ready to okay, now that I've been using this and it's been working, let's show you what it is, which is fun. secondly, it's just more of the concept of when you're looking at, say, 100 different ETFs, because we all know the idea of sector rotation, right? That's what's been driving this market. What'll happen is money goes into tech, and it's coming out of energy, and while those two sectors are going crazy, the SPY, right, is trading sideways. So you don't really make a ton of money playing the SPY, but you do if you're long the sector that's getting money flow into it, and then short the sector that's getting money coming out of it. And that could be whether it's energy or metals or ag, right? Those are sectors as well. And so what's great about this is it's really just finding a way. And what's great about ETFs too is that the implied volatility is really low. A lot of times the ETFs are fairly low price, so you can actually get some fairly cheap options like 50 cents, and they go up to $1. That's like 100% gain. So it's a lot of fun stuff there. It's geared towards smaller accounts, simple kind of trades, directional trading, and stuff like that too. So it's hard to explain everything I'm going to be talking about in one little kind of snippet here. But suffice it to say, I'm more excited about this class than anything else I've done this year, simply because of the idea of introducing concepts you may not have been thinking about so far. Okay, so we're going to talk about some directional trades, some things to do if you're nervous about the markets and like, okay, what do I do if I need to hedge? Understanding how your portfolio is correlated to the rest of the markets, even if you're trading a $10,000 account. Portfolio correlation is not about diversification. It's about understanding what happens. Like, okay, gosh, if the market drops, if the NASDAQ drops 2%, what's going to happen to my portfolio? Great. Now, can you stick a stock in there that's either a honey badger stock or not worried about the NASDAQ that's going to help offset any potential decline there, but not take away from the kind of potential power of that portfolio continuing to increase in value? Okay, so anyway, it's going to be a lot of fun. simplertrading.com/haystack. And I'll see you there Thursday at 7 o'clock Central Time.